Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. I want to give you some comments on today's grain trade, today being Monday, August the 10th. We'll start with the corn market. Obviously saw a decent trade last Friday, decent being that we were able to bounce a little bit. Same for the wheat market and also the soybeans. Sunday night we opened up. Weather seemed, pretty benign over the weekend. You had some areas get some rain. 10-day forecast looking a little more dry. Pretty much out of the gate we saw buying, and especially in the soybeans. So you actually had Friday the beans finished on their high, gapped higher last night. My opinion, they helped everything move higher. So for corn, last few videos probably now I've talked about the daily stochastics being very low on the daily corn chart. Finally that came into play today. We did reach up and fill the gap on the December corn chart. I think that's a good thing. You do have the weather to deal with. You've also got some satellite imagery, floating around with people, basically critiquing the quality of the crop. We've also got a report on Wednesday. You saw a big option volume today. And then, we also had a little bit of a weaker dollar. So finally a good bounce for corn. We'll see what it does this evening now that we filled the gap. I would say we need exports to pick up. Really, it's only worth as much as someone's willing to pay for it. And we need to start selling it and selling more of it. Moving on to wheat. 514 in that September contract, 2 days in a row. Took it out briefly this morning, and then we did sell off on the open. Unfortunately, it didn't quite get low enough to buy, at least in my opinion, and then we did see a sharp rally from there. So missed that trade. Kansas City's losing ground to Chicago. That's been the case for the last couple of days. Wheat extended over that recent high, got into the mid-20s. Again, more to me, technical buying. Don't think it's really, certainly it's not because of the fact that we've been slowly getting some better business. It needs to be more consistent, and we need to see several weeks of this moving forward. Moving to soybeans, again, it was rather oversold on the daily charts only. Finally, you saw, just like my last video, we talked about can we add to this now that we've gotten rid of the shenanigans with the August contract. We've done that. We've effectively created a little bit of an island bottom because we gapped higher last night. Firm all day, firm into the close. Unfortunately, this is right in front of the report. I personally would prefer that we would consolidate, maybe trade two sides on the way into it. Looks like definitely we're going to try out $10 this evening, 10.05 maybe. Problem for the trade today was almost no rotation. So I think it would be healthier for soybeans moving forward if we could rotate. We'll deal with whatever the USDA has to tell us on Wednesday. Notice soybean oil is not participating anywhere near because obviously they're buying meal, selling oil. However, look at that daily chart. We're trying to do something. As long as nothing comes out on Wednesday that destroys the chart, you got to think there's still some upside in soybean oil. So that's all we have for today. Check back in on Wednesday for the USDA report. Again, this is Kyle with International Futures Group in Chicago, a division of EFG Group. Thanks and have a great day.